Thank you. So my name is Wei-Jing Lei. I am actually work at Comcast too, but hey, Comcast night tonight. And with my career, most of my time actually spent with banking, financial industry. So that's most of my knowledge right now still in this little brain and retaining. So tonight's talk is about regulatory reporting blockchain technology. I cannot beat that with a technical talk because I am a project manager who knows this much tech and it just run projects. So this is more informational, sharing as opposed to actual development technical talk. See, so as you guys are aware, there are a lot of regulations for banking. That is one of the most heavily regulated industry. I think the only one could top banking or equal are pharmaceuticals. That's what I heard. And these are some of the regulators at any given time sit on top of most banks in the US. The Federal Reserve Bank of the US, the FDIC, the OCC, its Office of Currency and Control. CFPB, I'm sure you heard a lot on news, is a Consumer Protection Bureau. CFTC, you know what? I never remember who they are, but for you guys who trade crypto, you probably hear about them a lot. And they're correlated with SEC, which is the Security Exchange Commission. I have DOJ there. Why? It's because all these regulators, they can set rules, but if you break them, only DOJ can prosecute them. Otherwise, all those regulators can just say you broke the rules, and that's the best they can do. Oh, get away. Now, there are lots of regulations there. If you're interested to find out more regulations, here is the website you can go in. But on top, I just lay out a few of them for you just for information. So for capital risk regulations, there are CCARs, there are BASILs, and there are abbreviations. So for this, basically, especially CCAR came out of Dodd-Frank rules after the 2008 crash. And to make sure the banks don't just put up the risk and not putting out enough capital on the side in case of a market just crashed. And Basel has a similar requirements. What's the difference? CCAR is a US regulation. It's run by the Fed. Basel is for European. So if you are like JP Morgan Chase, who has operation around the world, they will have to report for both CCAR and Basel. Anti-money laundering, fraud, they always go together. The first day I went to work for a bank, I didn't know what anti-money laundering is. After all the training, oh wow, what a scheme they put together. It's a very, very tight look after, rag that all the banks have paid a lot of attention. Not that they didn't do anything behind the federal agencies, but you always do this KYC and AML, the two rags that you do. KYC is known for your customer, and AML really just anti-money laundering. And then there are many other rags on this list. They're for lending, credits. The Fed has most of the rags. CFPB second, follow up from the Fed, and then a few other agencies also their own rag. Oops. Hello? Did I not do it right? Oh, put it. Thank you. So. Technical difficulties. Told you guys I'm not technical savvy. Thank you.
Programmer and I hate computers more than anyone.
Give it a shot now? Still nothing. Brand Kitty Cat will have a pointer though. Anybody want to chase it? Cool. Thanks, Ben. Oh, even that. Uh-oh. Don't. Oh. Yep, we are. Thank you. So there are a lot of challenges, the banks facing, financial institutions facing, comply with all these many regulations. Here are some of them. There's 6 of them that's listed by the KPMG paper they publish online. Any one of you guys who ever work on anything related to data reporting, you understand data from different legacy systems don't talk to each other, even from the same company. Data integrity, people just dumb data, garbage, I'm sorry. Entries is not always clean, not to blame anybody. Manual reconciliations, because data formatting are very different systems, different languages they use. So it takes a lot to format both the formatting as well the hierarchy of data to make sure all things can piece together. And all that comes in with a lot of manpower. And it's costly. We don't work for free. Anybody? I don't. Next one, please. All right, so the next thing is data protection. That costs a lot of money. You guys hear about all the breaches of your personal information. Even the credit bureau got hacked. Nobody wants to do that, and the regulator pays, put a lot of regs out there to saying that you must protect customer information. For banks, they have everything, right? Your social, your date of birth, they can be you. You really want them to protect you in any way and form. So those are different ways to secure data, both, where they do, where they store the data arrest, data transfer. They are not cheap to making sure to protect the data storage and transfer data. And so again, it comes with hardware expenses, human expenses. Again, another expense. So what is the cost? I keep talking about the cost. Here is the cost by Wall Street Journal. As of 2014, the big 6 banks spent $70.2 billion to comply with regulations. So it's a lot of money.
Their profit was several trillions of dollars, so I'm not crying for them. Sorry.
I would take the 0.2 billion. Just me. So, but then again, why do they spend that much money to comply, right? One of the things we talk about, DOJ potentially could prosecute the banks, but before they send anybody to jail, the one thing that they do is put on fines. So the next couple slides are to tell, just giving you some information about the kind of fines each body, that's like headline news, fines banks receive, the slap on them. And the next page, which is the mother load of them are $20 billion. That's regulation, compliance failure related costs that the JP Morgan Chase paid $20 billion. But you're right, they make a hell lot more than, oops, can I say that? $20 billion. Next one, please. So here comes the point, right? Why blockchain? You do all this, that's explanation. Blockchain helps because you have the security, you have the data from beginning to the end, always the right data for you to go to. It's when you do the reg, the concern is data, it's a protection, it's data accuracy, it's right there. It's right now, we just need the ability to people buy in and process. I don't know how much they spend so far, but from what I've heard, that JP Morgan is putting together a huge project to develop a blockchain technology for them. Not sure what exactly they're going to do, but they are investing heavily. Yeah, yeah. I don't know how much they're spending. So this is this is some of the reasons right there, and I think that's the end of my. Yeah, that's the end. Questions? Thank you.
How do they calculate the penalties? And since pocket change was suggested, and I agree, does it actually affect change? Because no one benefited from the Equifax hack.
Mm-hmm.
The government may have benefited. I don't see how we benefited. So I'm just curious, how do they actually determine what the fee is going to be, and is that the penalty?
Okay, so the question is, how do they determine what a fee is? The answer is, I don't know. I can only guess is that they perhaps saying that how much of the damage is, they come up with a percentage, and the final number, I'm sure there are a lot of politics getting into how the banks negotiate with the regulators, come up with this number, and a lot of promising we will not do it again until, oops, they did it again. But there's no actual calculation that ever published that someone can see, and nor they want people to know.
I mentioned that, the reason I asked the question is because of the PDPR, which is this European Union movement. They seem to be taking an active stance on doing something about it, rather than throwing fines at people. Maybe that's what we have to do.
Perhaps.
Cybersecurity, University of Maryland, this is a big deal that we don't have any policies in place that really intertwine with new technologies to bring them to the same surface and the same level. So just interesting to see what other people's perspective is on how to weigh these humongous penalties with reasonable mandates and technology solutions to the problem itself.
Right. So I don't really know how to repeat your comment, but one of the things is that it's not anywhere published, or is you can really quantify that. Is a reputation cost for banks. I can share with you. I work on one of the projects. You know, I have the Scrum Master actually ping me to say, seriously, $50? Right? Why did he say that? Because the bank were to comply with one of the regulations the CFPB put out there to back pay some of the interest that is charged to the service members. The total amount of money of all the members that we miscalculated to get us $50. The fact that you spend the manpower, the developer time to fix that, it's definitely a lot more than $50. I don't know if you guys, developers, usually don't get paid $50. They get paid like at least double. But here's why they do it, right? They get a fine. We don't know how much. But also the reputational costs. Headline news, you rip off our service member overseas while they're serving our country. Oh God, that is not something anyone really want to be put on the headline news. There are also costs that we didn't say it here, but it's real.
Thank you.
Sure. Any questions?
Yeah,
Sure.
So right now people look at decentralized financial technologies as a way of skirting regulation, right? And you're suggesting the use of blockchain to meet regulation,
Yes.
right? So in order to do that, does blockchain have to enter regulation? Do you think regulation can be silent on the technology used to meet the spirit of its law? Or do you have to explicitly call out the technology that's used to meet the regulation?
So can blockchain silence meet the regulation? I think it could. You don't have to call it out. You can, if you don't tell people, for example, right? What do I use JavaScript? Do I use Oracle database? Do I use, blockchain? I have to say, majority of people don't know, or do they really care how you use it? Even most people in the bank, right? The financial analyst, do they really care what technology that you use? It can be totally silenced and not announced. It can be in the bank using it because it benefit the bank's bottom line to comply with regulations. Even though this administration, I'm not talking about politics, may roll back some of the regulation, but still banking is heavily regulated. So you do still have to do all this work. Hopefully I answer your question.
Yeah, up to the point you need interoperability, right? Like, I guess we hear about Swift codes and all of that.
Right.
If you had to put a blockchain wallet as a standard method of exchanging something, it would have to be a standard of some sort.
Would that be a standard of some sort? I guess, but I hate to say I'm not technical enough to really able to answer your question, so I'm sorry.
But the Esignature Act of 2000, one of the things that made that smart is they didn't specify a technology. Because at that time, SHA-1 was the shit, right? You know, and it specified that it would have been outdated
Yeah, well,
by
that's
2002.
always the challenge.
You know, so not specifying the technology is the smartest thing they can do for the welfare.
Yeah.
The only thing that blockchain technology, since it's associated today with cryptocurrency, would be forced to be regulated just because it's associated by the politicians, or first by the bankers, and then by the politicians.
So the question is, will blockchain technology be enforced regulated because its association with the cryptocurrency? In my humble opinion, no. There are two different things because cryptocurrency is a, I guess, can I call it a commodity kind of, right? So that is on its way to be regulated, you know, as SEC is looking into, you know, regulating. Blockchain technology is a technology. It's how could you regulate Java, right? So the two different things.
So I've registered for several blockchain-based products that require a KYC process using the eKYC service.
I'm sorry, I have a hard time hearing you.
So I've registered for a couple products that required eKYC to occur. It was the same company providing the service, but because of regulations, for whatever reason, you couldn't go through the process once. You would have to go through the same process with the same company through multiple different organizations, even though you've already gone through it, and that repetition. And so when I asked them about, can I use this same service for other organizations, they said no. And I was wondering, from your knowledge, is there a policy behind that every company has to do their own KYC process, even though it's already done before?
Good question. So does every company has to do their own KYC, or can they use one central location? That could be. Say that again. Or should they use someone else? So that circle back to the security and the trustworthiness of the information on blockchain. Because right now, as what happened with most banks, yes, they want their own KYC process, validate you are who you are. You are not from some country that is blocked by the U.S. as terrorism. You are not a Mexican drug dealer or any kind of money you wanted to launder money, etc. If and when all the entities coming into agreement, all the information coming to central blockchain information is accurate, everybody can trust, right? That's one of the things about blockchain. Then makes sense for any consumer only go for one place to confirm the customer. And one of the things blockchain is you cannot just go in and alter data. Right now, I mean, Oracle tried really hard and to protect the database, but I can tell you one thing you guys can relate. I work on a project. The DBAs has access to all data, everything. We're like, do they have to? They have every single personal information on their hand, and they can download it. Nobody would know because they're DBAs. And it was like, yeah. So DBA, potentially can change data without knowledge, or at least without something that quickly can be audited, right? For example, in today's technology, hopefully blockchain, I don't have enough technical knowledge that it can be protected, not altered, and so people can trust the data and the validity of the data.
Thanks, Rachel.
Thanks.
I wanted to say, I forgot to properly introduce Wei-Jing. I apologize. And she sold this on short in her own is an experienced analytics and program manager, having 10 years of experience in mortgage banking and other financial services. So during her years in the banking industry, she led multiple regulatory projects. Most recently, she led the CCAR project, or CCAR project, for Barclays Bank of Delaware. So I apologize that I forgot that at the beginning, Wei-Jing. Can we have another hand?